you're tuned into Startup Central with me, Ankita Saxena. It's a show where we get you all from the world of startups and more. And first on the news today is that Indian agri-tech startup Arya.AG has raised 725 crore rupees in equity funding from GEF Capital Partners, with over 70% of the funding in as primary capital. Now, this marks a major step towards its IPO plans within 20 months. This milestone comes nearly 3 years after its $60 million Series C round, when Arya.AG was valued at 2,200 crore rupees. The funding comes on the back of strong financial momentum in the first half of FY26. The company has posted net revenues of 300 crores and profit surged 39% to 31.5 crore. We have the company's founder and CEO Prasanna Rao joining us now to share his insights on this landmark fundraise, the company's growth trajectory, and how the fresh capital will accelerate the journey forward towards the IPO. Hi, Mr. Rao. Thank you so much. Good evening to you, and thank you for joining us today.
No, thank you. Good evening, Ankita. Thanks so much for having me on the show.
Mr. Rao, you've raised 725 crore rupees, around $80.6 million in Series D recently. The round was led by GEF Capital Partners. Firstly, how are you planning to utilize the funds?
So these funds are basically meant to deepen our reach into the India's hinterlands, serving the smaller farmers, their organizations, and other smaller entities that are present and operate in these near farm markets. Specifically, we are wanting to strengthen our pre-harvest service offerings, which basically mean that we bring in technology closer to the farmer's doorstep. Technologies such as drone spraying, technologies such as soil testing, and other sustainable agriculture practices. The objective being that we promote both market-led and climate-smart agriculture. Apart from that, we want to strengthen our footprint on our storage and financing services, which ensure that the food loss across the agriculture supply chain is minimized.
Mr. Rao, also, as I can see, this is a major step towards your IPO that you plan within the next 20 months. Are you on track for that?
Absolutely. This is one of the milestones that we had set for ourselves in our journey towards going public. So the whole idea is that this particular round of funding gives us the required runway and the resources to pursue on that objective.
Also, just shed some light, some color on your numbers as well. As I can see, you have been profitable. In fact, your profit surged 39% in the first half of FY26. Do you plan to, or are you on track to sustain these profits going ahead as well? Because the path to profitability is something that a lot of startups are looking at before they take the public route.
No, certainly, Ankita. Actually, this has been one of the core strengths of the company, that we've been able to double our profits over the last 3 years at least. And this year, in the first half, we've seen a growth of about 39% in our profitability numbers. And we are quite certain that by the end of the year, we would be able to sustain these numbers and further grow that in the coming financial as well.
Also, like you mentioned, that you've raised these funds to solve a lot of challenges that are faced, by farmers and small farmers. Talk to us about the challenges faced by the Indian farming community, and how are you helping farmers navigate through it?
So when we started, our basic, ethos or the problems that we identified that we should solve for were pivoted or were focused around two basic challenges. The first one was that farmers in India never really had the choice to decide when they want to sell their produce after harvest. So invariably, immediately after harvest is where the farmers are forced to sell, because they need that money, knowing fully well that at that time the prices are at their lowest, and if they could wait for a few months, they could earn anywhere between a 15 to 40% more than what they actually did. So the whole idea of Arya was to make sure that we bring in storage and embed that with finance, so that farmers and their organizations can decide to sell when the prices are right. The second problem that we identified for ourselves, which we saw very, very prevalent in Indian agriculture markets, was the fact that when the farmers decided to sell, even at the immediate harvest time, they did not have the choice to really decide whom they want to sell that produce to. invariably they would be forced to sell to buyers in their immediate local network, maybe in their own hamlet, maybe the nearest mandi. But if they have a reach to buyers outside of their local network, imagine a large corporate buying directly from them, or a large processor buying directly from them, they could make another 15 to 20% more. So at Arya, we basically look towards solving these two problems on the freedom of choice for farmers to be able to decide when they want to sell their produce and to whom do they want to sell their produce to. So it's basically these two challenges, and to be able to solve that, we've been able to embed technology at the pre-harvest stage and also on the post-harvest side on storage, embedding finance, and in connecting them to markets at scale.
So basically, Mr. Rao, what I've understood is that you not just enable you not just enable storage for the farmers, but also help them connect to the right marketplaces. Am I correct on that?
Absolutely, absolutely.
Right.
And that
So
is
help
where we
us.
see.
Right. Go on.
Sorry. No, I'll wait for your question, Ankita.
Right. So what I'm trying to understand is help us understand what's your business model here.
So imagine if Ankita is a farmer, she harvests her crop. That same crop that is harvested, she could store at a warehouse which is closest to where Ankita is, and take finance against it so that she can wait for the prices to improve as the supply goes down after the harvest. And when the prices are right, we would connect Ankita to a wide variety of buyers across the country so that Ankita can decide whom she wants to sell her produce to. If you see the way the model is structured, is that the moment Ankita decides to store, we earn a storage revenue from her. By storing, she can access a loan so that her day-to-day requirements after harvest can be met. And on that, either we connect her to a bank or we give a loan to her on our own balance sheet, and thereby earn an interest income or a fee income for originating that loan for a bank. And finally, when the prices are right, we connect her to a buyer and ensure that she receives the payment immediately. And in that case, we charge the buyer a fee. So the whole revenue model of Arya is based on these three layers of storage, of embedding finance on storage, and connecting the farmer to the right buyers who then make sure that she gets the right price. So we earn out of these three layers. Apart from that, we also ensure that the right kind of package of practices are deployed at Ankita's level so that when her produce is harvested, she can reach the right buyers.
Interesting. Mr. Rao, also, like you mentioned about the storage space, and the platform, I believe, currently operates across 60% of India's districts with a network of around 12,000 agri warehouses. Correct me if I'm wrong. Do you plan to expand your footprint? Tell us about your expansion plans as well.
You're absolutely right. So we are present in about 60% of the districts. Our platform has about 12,000 warehouses on it. So the idea that we've been working on has been to go deeper into these particular districts. While you may see the number of districts increasing at about 20 to 25% annually, you would see that the growth really coming from deepening into more markets, more remote markets in the country, so that more and more farmers can avail of these services. And the whole idea being that when we operate in a manner where we are going deeper into the markets, we also improve our own efficiencies, thereby expanding our profit pool.
Right. And you've also enabled disbursement of over $1.5 billion in loans to farmers and other agricultural stakeholders. How do you see the credit offtake in the coming months? How has the rural demand been so far?
So we've seen traditionally a growth of more than 50% in the disbursements that we do from our own balance sheet. And we believe that even this year it would continue. In terms of the credit quality, we've been, again, the whole book being completely secured because we lend against the stored commodities. We've seen the default rates being very much in control. We've had near zero NPAs for almost the entire lifetime of our lending experience. And the whole idea has been that the credit offtake as we see it, there is demand. Yes, of course, there are challenges, as all of us know, that the commodity prices in agriculture commodities have softened over the last, say, 12 to 15 months. That has had its own kind of challenges. But with respect to Arya's business model, because we lend against the stored commodities, we have seen the credit quality being completely impeccable. And at the same time, we've seen the demand sustaining itself.
Right. Also, Mr. Rao, you're using a lot of tech to help your farmers. Tell us, how are you using tech to enable them, or whether it is connecting the farmers to the right buyers, to sell to the right places, or find the right marketplace? How do you enable that through the use of tech?
I think the greatest challenge for us as we started out has been to see how we could enable services for farmers who are at the farm gate, where the ticket sizes are low, where their average unit sizes may be lower, and technology has been the single most important enabler for us to be able to deliver these services. Our loans are disbursed in less than 5 minutes from the time the farmer stores the produce. The farmers and the other stakeholders can identify a warehouse and book a warehouse real time on a platform which is very similar to, say, a hotel's platform or a booking platform. And similarly, when a buyer and seller are connected, the moment seller looks for a buyer through the platform, the seller can identify relevant buyers on the platform, and they could be connected to each other. It's been a process. It's been a journey. Is it akin to or does it work in a manner we've seen e-commerce working, where sort of somebody, the buyer comes in, adds things to cart, pays and checks out? It is still not there. We still have a few legs of physical and digital collaboration to be able to make sure that the overall commerce piece is enabled. But what we've seen is that technology that ensures that the farmers are able to grow the best crop, technology using satellite imaging and remote sensing, which tells the farmers and the FPOs or the farmer producer organizations which parts of their farm are facing stress, whether it is biotic stress or abiotic stress. Once the crop is harvested, the whole quality assessment being done through image analytics and AI, the ability to monitor warehouses using computer vision at the warehouse at these remote locations, the ability to disburse loans and ensure that the credit is available to farmers in record time after harvest, and finally the ability to connect to buyers on a real time basis, and ensuring that the payment is received by the farmer on a real time basis. At each of these steps, we have technology integrated. And one of the key objectives of Arya has been to see that we break this myth of of the fact that of the piece that technology sometimes cannot be accessed by smallholder farmers and their organizations. The whole idea is that, can we make technology affordable so that even the smallest of stakeholders in Indian agriculture can access those?
Right, Mr. Rao, thank you so much for taking the time out and joining us and throwing light on your startup and the new fundraise. All the best to you. Thank you so much for joining us.
Thank you very much for having me, Ankita.